All right, hey traders, this is Christian from Hertz Tribeca Trade Group, and today is Thursday the 4th. Well, some interesting price action today, and it seems like we've been getting that every day. But today we finally got that pickup in volatility that not only affected small caps, but also affected more so international securities as well as U.S. securities. So I always like to start with the S&P chart, but really that wasn't where the volatility, even though the VIX I think at one point was up about 30% on the day, from a really low level. Remember, coming into today, we were around what, like a 12 in the VIX. So we did get that big pickup in volatility to about, I think we peaked out at a 1584 in the VIX, which still historically is a low level, but for a one-day jump of 30% is notable. We did get that sell-off at the end of the day. I'm going to review the VIX charts. I don't only look at VIX, but I also look at a couple other ones, which I will share with you, and I've done that in the past. But S&P, if you're looking at this, we didn't even close close to the lows today, so down 0.75%. I was secretly rooting for a down 1% day because you have so many people talking about, oh my God, we haven't had a one-day move in the S&P forever. So I'm welcoming a little bit of volatility. I, of course, don't want to see the market break down, but I think it's healthy to get those pullbacks. And, I'll try not to make too many references to yesterday's video, but if you did not get a chance to read yesterday's video, you could go back. It's on YouTube, and you could go through and, I talk about how I was not liking even the little bounce that we got yesterday, and I talked about what hedges I was in, and talked about how I was expecting some type of a market move to the downside. So that really worked out pretty well. I had some hedges on. I'm going to go over what names I had the hedges on and what I did today with those. But yeah, I mean, all in all, this is really not bad in the S&P. Bounce off the 50-day. And we'll see what we get tomorrow. I wouldn't be surprised if we have a negative. What I would be rooting for tomorrow is a negative open, and then possibly buyers might come in. But if we start the day up 20 basis points, we've seen how this happens before, and I just don't think this was enough of a move to really get people enticed to kind of step in and buy the dip. And keep in mind, tomorrow is jobs report. So the main thing that I would watch for tomorrow's jobs report is not the actual headline number for tomorrow. So bring this up here. It's really the wage increase number. That's, if you've been listening to some of this Fed testimony, that's there's been a ton of Fed speakers. I think there was 10 different speeches or something like this week from various different members, including Powell. They were pretty hawkish, and I think that's what really moved rates, or contributed to the move in rates moving yesterday, is that they've been pretty hawkish, and that's one thing that they're going to have their eye on tomorrow, and I think everybody's kind of aware of that, is this average hourly earnings. Now, one of the things that came out also, which alerted people to the fact is, Amazon comes out and says that they're increasing wages for $15 an hour for minimum wage for their particular job. So this is really going to be the thing. I think this will be secondary. The 185 is what they're expecting for tomorrow, and the change in private payrolls is 180. But I think this number is the one that, the zero point 0.3. If this comes in muted, that should be good. I would think that would be bullish for equities. If it comes in like 0.5, 0.6, watch out a little bit, is my take, and we'll possibly see rates tick up again. I would think, if this number is going to be higher. So 0.3 is what they're expecting for month over month. Year over year, they're expecting 2.8. So I think that may be one of the drivers for tomorrow. All right, so if we shift over to Nasdaq, which did have more than a 1% move, was down at one point more than 2%. And again, this has been the story for a little bit. It's been, what we've been seeing this week is kind of a rotation out of growth and into value, also a rotation out of momentum names, if you want to classify it that way. So Nasdaq basically stopped right at the 50-day moving average. And you could see how tight this is at the 50-day moving average. This trend line, we've been doing pretty well in terms of bouncing off of it, but I don't know. Maybe this time we might have a little bit more damage to the downside. Clearly, if you go back to IWM, which I had said yesterday that all we had yesterday was an inside day, and sure enough, we got that downside. So I think I did a pretty good job, mentioning that yesterday. While it's nice that small caps bounced, they did not take out. I think that was important. If you're familiar with inside days, it's an important relationship here. So that it basically means nothing, right? It's not a trend change or anything like that. And we had more follow through, down 1.4%. So where does this leave us right now? Well, I would say watch this target. If that happens tomorrow, and we get a further sell-off, the good news is it's not that much further down. It's basically about another 1.5% move down to the 200-day moving average, and that might be an area that would entice me to put something onto the long side. But again, remember, if you're not familiar with this principle, I've been repeating it in case you're not familiar with it, but small caps usually lead the market move. I think they did a pretty good job showing where that the overall market was going to get a bit weak. So sometimes if they lead the market down, they could also lead the market up too. So maybe watch for a hammer bar on the 200 today. That would also be not a bad outcome, I think, for tomorrow. If we look at IWC micro caps, right? This took out a VPOC the other day and is coming into the 200-day moving average. So again, I think it will be important how this wraps up the week for tomorrow, whether or not it remains above the 200-day moving average as well. That could also be something to look at for a long with that support of the 200. So looking at the VIX, so I went through this yesterday. Again, I'm trying not to say that over and over, but I went through this yesterday, and I said that, or 2 days ago, and I said that we might have more volatility. So the RVX, if you're not familiar with this, is the VIX for the IWM. Remember, the reason why I look at these other things besides the VIX, because all the VIX measures is the volatility in the S&P. It's not going to tell you what the volatility is in the Qs. It's not going to tell you what it is in names outside, right? So it's only going to tell you what the S&P 500, and the S&P 500 outperformed today as well as the Dow stocks did. If you look at VXN, so notice that we're at this 200-day moving average. We closed off the highs. Another one before I go to VXN is the VVIX. That is the volatility gauge of the VIX itself, right? And we saw this back here in the beginning of August, and this was a pretty good tell. We had this move. We got really, really low here, down all the way to an 80, and we certainly saw volatility snap. It just got too low, and that's what happens sometimes when volatility gets way one end of the spectrum. But it was over in about a week, and we kind of continued with that bull run. So we'll see. This is I'm not sure if that's all we're going to get. This is also a toppy looking candle, but it's too early. I think it's too early to tell. I'm not going to make any conclusions. My crystal ball is I don't know, foggy today, but there's no reason to make any predictions about this. Same thing with the VX. So the VXN is the VIX for the Qs. Also, same thing. I think a good sign that it closed off the highs. This was kind of give you a little bit of a benchmark before. Similar looking candle. This even had a longer tail to it, but volatility stayed elevated for about a week before it moved down. Again, we're not. Here's another one too, where we managed to actually go up a couple days. So I wouldn't put too much into, even though I'm kind of calling it a little bit of a toppy candle, we could still get volatility move up tomorrow. So definitely not out of the realm of possibilities. So that's the major indices. I could talk about some individual names as well today. The option activity for the day, the fear is not there yet. If you look at the put call ratio, finally first day over 1, right? And we just haven't seen that. That also kind of gave me a little bit of a hint to kind of stay hedged with a couple instruments that that I had on, because we just haven't seen any of that really bearish sentiment yet. First day that the put call is over one. So, if we get one more day on a Friday, maybe we can end up having a bounce next week. Is this really like alarming? Like, if you would have read Twitter for a couple hours today, it seems just a little bit too extreme. This happens with the market. We don't go up in a straight line. And, I made a comment the other day that, and you can find this on my Twitter page, that I thought it would be really healthy if we have a 1 to 2% pullback. What it does when we have when a pullback like this is it wipes out all that positive, super positive sentiment, right? And I think that's healthy for the market. When sentiment is high as it's been, it's dangerous, right? For everybody to get super bullish. And when I see people doing like high fives routinely on Twitter over small things, it just tells me that the sentiment is a little bit too high. So, unfortunately, this was pretty painful in terms of how you're positioned. We've been talking about positioning and kind of how I changed my tune and got out of a lot of growth stocks. I mean, I had to take some things off for either small profits, or just not where I wanted to take some things off. But thank goodness I did. I think that was on Monday, I want to say. I kind of wiped all my short-term. I had a bunch of plays on just to rehash this quickly. But what I saw was this, right? And I know I mentioned this yesterday too, but I had in my weekend newsletter, I was talking about how I thought FDN, which is my FANG proxy, because it's the internet ETF, and the FANG stocks are the biggest weight in this. I said, hey, this thing's coiled, and it could be ready for a big move to the upside. Once I started to see us start to move down, and again, all in my videos this week, I said, you know what? I'm actually going to put puts on in this thing. And that works pretty well. So, the move may not be done yet here. There is some support here, but again, not out of the possibility that we could go down to this VPOC down here. I did take off my hedge today. I took profits in this. I had FDN. Let's see, what was my final target on FDN today? $5.56. I think I got into some November 139 puts at around $3, and I took these off for $5.30 and $5.50 today. So nice profit. And so I would rather be at this point, making some money on the puts, just position a little bit lighter rather than have to be, completely exposed for puts. I also had Q's puts. Keep in mind, if you see something like this, I had somebody ask me this on Twitter. They said, well, yeah, the FDN options are really wide. Well, then just buy Q's puts. Right? I mean, because if that goes down, if the FANG stocks go down, then sure enough, the Qs are going to go down, and they're a lot more liquid, right? So if you kind of just connect the dots a little bit, or you could buy puts in a couple different of the FANG stocks, right? So that was the case there. If you take, so this was down 2.2%. So as I mentioned, that really the S&P wasn't down that much, but look at what happened in biotech stocks today. Which also kind of had that inside day yesterday, down 3.2%. The Chinese internets, by the way, and I will say this, will say this to them blue in the face. If you are going to traffic in Chinese internets, I saw somebody the other day thinking that the Chinese internets had bottomed. Please watch the local markets. China internets. Where are China internets from? They're from China. So look at how the overnight markets trade. I don't know why this is so hard for some retail investors, but every night when you wake up in the morning, I would not just be looking at S&P futures. I would be looking at what the overnight markets did, and they closed on the lows, right? So if this continues to break down, and the Shanghai is closed, but the Hang Seng is open. This is not rocket science, guys. Just look at what the Asia markets do, not what just the ADRs do in the U.S. It astounds me that some of these guys on Twitter will predict a bottom in Chinese internet companies without having ever looking at the local markets. It, it's dumbfounded. I'm dumbfounded by by how stupid this is. But anyway, it goes on. So a couple other, so the China internet names were down over 4% today. A couple other groups, the semiconductors were down 2.2%. There was a negative note out on that group. So that is that. You know, and I'm not perfect either. I mentioned MNK yesterday in my video, and this I got smoked in this. This was a real fake out move for me. And you know, look at this thing. It had a great candle yesterday, and they had a drug announcement today that was positive, but it was perceived as a weak report because I guess there's a rival with another company's drug. The stock moved down 17% today, and I had shares in this, so it's not easy just because you're going through the motions and you're doing the right analysis. This could happen really fast. You know, this was down, I think, pre-market. So really just didn't give me a big chance to kind of get out. I looked at this a couple times and said, you know, maybe it recovers a little bit, but it got going pretty quickly. By 11 o'clock, you know, by 10:30, you're down 15% in the stock. So basically in an hour, you know, and sometimes these moves happen pre-market too. So option activity, you know, I haven't really gone over too many individual names. You know, when this happens, by the way, look at the move, nice little move there in the after hours with S&P futures. But I have to tell you, there really wasn't that much. Whoops, I didn't even do my summary yet for options yet. But normally we see a lot more option activity, really small bets. There wasn't any big grab for puts today in S&P, Qs, IWM. So there wasn't any major buy the dip stuff. I mean, I could show you a couple trades today, but they are really small. It's really small stuff. And I just don't think that that's noteworthy to be tweeting about a bunch of really tiny tickets today, because there just wasn't. You know, if you go to my blotter, which you could see here for large trades, AT&T, I think that was one of them. But you know, there was a little bit of VIX, but you know, the index flow that we did see was pretty far out of the money, both on the put side and on the call side. Same thing with VIX. You know, I saw somebody as well talk about how much volume there was in VIX options. Most of it was really far out of the money. So not chunky money. You know, I look for big premium when somebody's really putting down a decent chip. When somebody buys, you know, 50,000 contracts for 5 cents, that's going to skew the volume number, but that's not really a big, you know, capital commitment when somebody does that. So the last thing I would say is, you know, kind of the conclusion of the video is that there wasn't really that buy the dip mentality today. I used the analogy, I said this earlier today, you know, if you want to buy the dip, think about who else is buying the dip with you. Is it the big institutions? Because I didn't see that today. There was a 1 million share block order of the Qs that happened right on the low, very close to the low of the day. So there was a couple things, but there wasn't that really aggressive, hey, I want to get involved in the market. You could see right down here, there was 1 million shares that were bought on this hammer candle. So again, doesn't mean the market can't go up tomorrow, but for me, I would rather see that the institutions who are ultimately going to move the market one way or another, if they're not really buying like crazy, then I'm probably not going to do it either. That said, I did buy some Amazon today. You know, I think Amazon, you know, Amazon is, and I mentioned this in yesterday's video, I also sold a little bit of put spreads. It took out a number of what I call, you know, the VPOCs in in Amazon. It took this one out. It took this one out, 1903, and that was my level because I don't see anything behind it for a long ways away. I think there's one down here at, let's see if I can find it here. Oh, I don't see it on this time frame. I think on the, that's really far away. Maybe it was on the 1 hour that I saw this. But I want to say 1845 is what we found earlier. Now there's one all the way down here. So All right, so that's it. I'd like to keep these mini videos under 15 minutes. This is 20 minutes, so we'll leave it here. Have a great night tonight, and we do our live morning session, so we'll be going over the jobs reports bright and early. Have a great night, everybody.